Complete Guide to Volume Price Analysis by Anna Coulling. Part 1, Introduction. Have you ever found yourself staring at a price chart filled with all kinds of indicators, yet still having no idea what the market is actually trying to tell you? RSI tells you to buy, MACD screams sell, and the Bollinger Bands, well, they're just doing their own thing. In the end, you hit the trade button with the same confidence as flipping a coin. I used to be exactly like that. Until one day, I decided to strip everything down and go back to the basics. Price and volume. Not because I was smarter than anyone else, but because I was simply tired of relying on tools that only reacted after the market had already moved. Then, I came across a book that changed my approach. It's called A Complete Guide to Volume Price Analysis, written by Anna Coulling. This book doesn't tell you which indicator to use. It doesn't promise a secret formula or shortcut. Instead, it asks a single simple question. If you could only look at two things in the market, what could possibly be more important than price and volume? In this video, I'm not going to read the table of contents to you, and I'm not going to hit you with dry theory. I'm going to tell you why volume price analysis is so powerful, what I've learned from it, how I use it in real trades, and how it changed the way I view the market after almost 10 years of trading. So, if you've ever felt overwhelmed by too many indicators, and you're ready to finally hear what the market is really saying, this just might be the video you've been waiting for. Let's get into it. Part 2. Why price and volume matter. Let's start with a truth that's a little hard to hear. Markets change every day. Indicators come and go. New strategies appear every week. But one thing stays the same. As traders, we're all asking just one question. Where is the price going next? And here's the problem. Most of the tools you're using only answer that question after the move has already happened. Moving averages, RSI, MACD, they're all lagging indicators. They react after the fact. It's like trying to drive forward while staring into the rearview mirror. In her book, Anna Coulling makes a very powerful point, and it's surprisingly simple. In a world full of fake signals, there are only two things that truly lead the market: price and volume. Everything else is just a delayed reaction. On their own, price and volume are just numbers. But when you put them together, they form a language, the real language of the market. Price shows you what's happening. Volume shows you who's behind it and how serious they are. Picture this. The price breaks above a key resistance level. If volume is low, chances are it's a fake out. But if volume spikes, that's the big players stepping in. This isn't hard to understand. The real question is, are you even looking for it? Or are you still buried under a stack of indicators, hoping one of them gives you a magic signal? Volume price analysis is not just another tool. It's a mindset, a way of seeing. And once you learn to read what the market is really telling you, trading stops feeling like a gamble and starts to make sense. Part 3. The core concept of volume price analysis. Sometimes the things that seem most basic are the ones we overlook. In technical analysis, we often chase systems, look for pinpoint accuracy, or hunt for that one secret formula. But the truth is, the market isn't that complicated. Let's break it down. Price is the result. It reflects belief, fear, hope, and action. It's the first thing we see, but it's rarely the whole story. Volume, on the other hand, is the power behind the move. It's the footprint of money. It shows you who's participating and whether they mean business. Now here's the thing. Separately, price and volume don't always tell you much. Price can rise on pure hype. Volume can spike, but if you don't know where price is going, it's just noise. But together, they tell a story. They help you answer the one question most traders miss. Is the market being honest or just putting on a show? Let's talk about what VPA can actually do for your trading. First, is this breakout real or fake? If price breaks resistance but volume is weak, that move is not convincing. But if the breakout comes with rising volume, it's far more likely to hold. Next, is this accumulation or distribution? If price is moving sideways while volume slowly increases, smart money could be buying in. If price holds but volume fades, the demand might be drying up. What about reversals? Or just pullbacks? A sharp drop in price with a big volume spike may mean panic selling and a potential bottom. But a slow, steady drop with rising volume tells you the bears are gaining control. Here's the best part. You don't need a single extra indicator. You don't need to code anything. All you need is a candlestick chart with volume. So how do you actually read the market using volume price analysis? In the next section, I'll walk you through the 10 core principles from the book. Each one is like a new lens, helping you see what most traders miss. Part 4. The 10 core principles of the book. Principle number 1. Price and volume are the only true leading indicators. Every trader wants to know the same thing. Where is the market heading next? The problem is, most of the tools we use only tell us where it's already been. Volume price analysis makes this point loud and clear. There are only two things that lead the market: price and volume. Everything you need is already there. You just have to pay attention. Principle number 2. Volume measures the strength behind the move. Price can be manipulated. Volume is much harder to fake. Volume tells you how many participants are getting involved. If price goes up with weak volume, the move probably won't last. If price goes up with strong volume, real money is stepping in. Let's say a stock breaks out above resistance. If volume surges, the breakout is more likely to succeed. Principle number 3. Price action reveals market psychology. Every candlestick tells a story: fear, greed, hesitation, or surrender. Reading price action isn't just about red or green candles. It's about asking, who's in control, who's giving up, what emotions are driving the move. For example, a long lower wick with high volume may signal a strong reversal. Buyers are stepping in hard. Principle number 4. VPA helps you find real support and resistance. Support and resistance aren't just lines or round numbers. Resistance is where sellers actually show up. Support is where buyers commit their money. Volume tells you if those zones matter. High volume at resistance, sellers are serious. Low volume at support, buyers aren't interested. It could break. Principle number 5. Volume-based indicators are tools for confirmation, not replacements. Tools like OBV, VWAP, or VROC aren't magic. They help confirm the story that price and volume are already telling you. But no tool can replace your ability to observe. For example, if OBV keeps rising while price moves sideways, that could signal quiet accumulation. Principle number 6. Use price-based indicators strategically, not blindly. Moving averages, RSI, Bollinger Bands, these should support your analysis, not lead it. VPA gives you the context to use those tools wisely. Let's say price hits the 200 moving average, volume increases, and a reversal candle forms. That's far more meaningful than simply saying, price touched the MA. Principle number 7. Market sentiment is your hidden edge. Price doesn't rise because of good news. It rises based on expectations. Volume shows you how strong those expectations are. Say a company releases great news, but price drops on high volume. That probably means the good news was already priced in and traders are taking profits. Principle number 8. Emotionless trading begins with a plan. Data is data. Emotion is what ruins trades. VPA isn't just a tool, it's a mindset. It helps you trade logically, not emotionally. The book emphasizes having a plan, knowing your entries and exits, and sticking to strict risk rules. Principle number 9. VPA works in any market on any time frame. Stocks, Forex, gold, crypto, it all works. Whether you're scalping or investing long-term, VPA applies. Why? Because price and volume are universal. A VPA setup on a 1-hour gold chart works just like one on a daily Apple stock chart. And finally, principle number 10. Risk management isn't optional, it's survival. No matter how good your analysis is, if you don't manage risk, you won't last. The book dedicates a full section to this. It teaches you how to place smart stop losses, how to size positions based on your account, and how to set risk-to-reward ratios that make sense. VPA helps you find strong entries, but it's your risk management that keeps you in the game. These 10 principles aren't just theory. If you understand them and apply them, they'll change the way you see the market. And more importantly, they'll help you stop trading in the dark. Part 5. How to apply VPA in real-world trading. Let's talk about the practical side. The theory sounds good, but how do you actually use volume price analysis in real trades? The good news is, it's much simpler than you think. You don't need 5 monitors. You don't need to write code. You don't need to stack 10 indicators on top of each other. All you need is a price chart with volume. Let's walk through a few simple but powerful strategies. First, spotting a real breakout versus a fake one. You see price pushing through a resistance level. Should you buy? If the breakout comes with strong volume, that's a sign that real buyers are stepping in. But if the volume is weak or stays flat, it could be a fake move, even a bull trap. Here's a simple example. Price breaks above the previous high, but volume is lower than yesterday. That's a warning sign. Don't assume every breakout is real. Check if volume confirms it. Now, let's talk about identifying accumulation versus distribution. Price is moving sideways in a tight range. Many traders ignore that, but this is often where smart money is doing its thing, either accumulating quietly or distributing slowly. If volume is gradually rising inside the range, it could mean quiet accumulation before a breakout. If volume is fading, the market may be losing interest, and the trend could fizzle out. A bonus clue: look for pin bars or shakeout candles near the bottom of the range. These are often signs of strong hands loading up. Next strategy: analyzing pullbacks for safer entries. Let's say price just made a small pullback. Is that a buying opportunity? If the pullback happens on declining volume, that means sellers are weak. It's often a healthy pause in the trend. But if volume increases during the pullback, it shows that sellers are still strong. Maybe it's not time to buy yet. Use volume price analysis to confirm the pullback is clean, then enter near a support zone. Place your stop just under the recent low. Now let's talk reversals, finding real bottoms without catching falling knives. Here's the trick. Look for a mismatch between price and volume. If price drops sharply, then you see a pin bar or a hammer plus a sudden volume spike. That could be panic selling coming to an end, a potential reversal. But if volume stays low or flat, there's not enough evidence yet. True reversal points often come with the highest volume you've seen in several sessions. And here's the big picture. VPA doesn't give you a magic pattern to memorize. It gives you context. It teaches you how to ask the right questions. What is price doing, and is volume backing it up? Once you learn to read that language, charts stop looking like random noise. They become a story, a battle between supply and demand. Part 6. Personal lessons from the book. Now I want to share something personal. I didn't start with volume price analysis. In my early years of trading, I jumped from one indicator to the next: Bollinger Bands, RSI, MACD, candlestick patterns, you name it. I tried it. And the results? I won a few trades here and there. Then I'd lose 5 in a row, and I never understood why. Then one day a friend asked me, "Why don't you try reading the volume?" I laughed. I said, "Everyone sees volume. What's there to read?" But then I picked up this book, and it completely shifted how I thought about the market. I realized I had only been looking at the surface. Price goes up, price goes down, but I had no idea who was behind those moves. I couldn't tell when real money was involved, or when the move was just noise. This book opened my eyes. It showed me how volume reveals what's going on beneath the surface. I used to try catching falling knives. Price would drop hard and I'd jump in thinking I was buying the dip. More often than not, I got burned. After learning VPA, I stopped doing that. Now I wait for volume to speak. I look for panic selling, a spike in volume, and a strong rejection candle before I even think about entering. That one change has saved me from so many bad trades. To me, this book isn't just theory. It's like putting on a new pair of glasses. Suddenly, I was able to see what I thought I already understood. And if you're serious about trading, this is one of those books you should read, sooner, not later. Part 7. Pros and cons of the book. Let's be honest. Every book has its strengths and its limitations. And with a complete guide to volume price analysis, I want to give you a fair and balanced take, so you can decide whether it's the right fit for you. Let's start with the pros. First, it's easy to understand, even for beginners. There's no technical jargon, no academic fluff. Anna Coulling writes like she's having a conversation with you. The tone is light, but the message sticks. Second, the book focuses on market truth, not on tools or tricks. She doesn't push indicators or shiny strategies. She teaches you how to read the market itself. And that's powerful, because tools change, but your way of thinking stays with you. Third, it works in any market. Whether you trade stocks, forex, or crypto, if there's price and volume, you can apply VPA. And finally, it encourages independent thinking. There's no step-by-step template like buy here, sell there. Instead, it teaches you how to observe, interpret, and make decisions for yourself. Now, a few things to keep in mind. First, This book isn't for those looking for quick signals. If you want a plug-and-play system where you enter here, place a stop there, and walk away, you might be disappointed. This is about mindset, not magic buttons. Second, it doesn't go into coding, backtesting, or system building. There are no algorithms or ready-made strategies. But honestly, that's a good thing, because in trading, there are no shortcuts. So here's my take. If you want a book that changes the way you see the market, not just how you trade, it's a solid choice. But if you're looking for a holy grail indicator or a complete trading system ready to copy, this probably isn't the place to start. Part 8. Who should read this book? So who is this book really for? Well, it's not for everyone. But if you fall into one of these three groups, I think you'll get a lot out of it. First, if you're a new trader and you want to start the right way. If you feel overwhelmed by a jungle of indicators and chart patterns, this book is like a compass. It brings you back to what really matters: supply and demand, price and volume. Second, if you're an experienced trader, but your strategy keeps failing. Maybe you've been fooled by too many false breakouts. Volume price analysis could be the missing piece. It helps you see the story behind the candle. And third, if you're a long-term investor who wants to follow where the smart money is going. You don't need to be a day trader to use this. Whether you invest in stocks, ETFs, or crypto, knowing when big money is flowing in or out gives you a real edge. The best part? You don't have to be an expert to read this book. But if you're serious about trading and investing, it's one of the core foundations worth building on. Part 9. Final thoughts. Page by page, this book didn't just teach me how to read charts better. It taught me how to think like a real trader. A complete guide to volume price analysis doesn't promise fast money. It doesn't teach you tricks or shortcuts. What it does is give you a clearer, sharper way to see the market. And that's everything. Because when you learn to combine price and volume, you stop trading on emotion. You stop reacting to headlines. You stop relying on gut feeling. Instead, you begin making decisions with clarity, with structure, and with confidence that comes from true understanding. If this video helped you, don't forget to like, subscribe, and leave a comment. Let's open the conversation and grow together. And if you're on a journey to develop a stronger, smarter mindset for investing, follow us at Investory Hub. This is where we turn lessons from great books into real-world trading insights, where we break down strategies, simplify the complex, and help you build toward long-term financial freedom. Let's turn knowledge into action and action into results.